Hey folks, this is Ruben, Chicago Gold Trader, recording live from Chicago on the December 22nd. This is the second video in the series. The first one was this past Tuesday. You can look at it on Chicago Gold Trader on the Facebook page. I just want to recap and analyze some of the trading action the last couple of days. We had some dramatic moves, and let's go over that very short term 2-minute chart on gold, GC gold futures. As you see here in the action on Thursday, the 20th, we saw a lot of consolidation, horizontal consolidation in action, very low volume during the day in the overnight market. And then around 8 o'clock, toward a little bit after the open, 7 o'clock a.m. Chicago time, see a dramatic sell-off in the gold futures for the second time in a week. The first dramatic move was Tuesday, and I went over that move on the downside in that first video on Tuesday. So if you take a look at this, we had a lot of heavy sellers coming in. Broke the support line, the very short-term support consolidation pattern to the downside. A lot of folks coming in. As you know, the pattern, the V-shaped pattern here is always a reversal. So once you get to that bottom, that support area, it always reverses to the upside. It retraces, and I'll cover the retracement in the next video. It retraced, tested twice the support levels here at that was about 16, 37, 36 area. And that was the first test was on the overnight market. The second was toward the actually, I should say the first test was in the morning session, and the second test was in the overnight market on Friday in the AM. Friday AM in the morning. And then again, another retracement. This one's even higher. I'll cover that in a minute. So this is Friday. This is the Thursday session. This is the Friday session. There's the dividing line between the sessions. So we had a trend up, as you see. A little bit of retracement. No real trend, because once you got in on the second, if you got in lucky enough to get on the second leg to the upside, they brought you back right away. You would have had to hold on to this all day to make money, because most people would have probably got in here, so they would have came back to break even, and that would have been around the 44 area. Let's see, yeah, about the 46 area. And as you see, we had heavy resistance at 1660 on Friday, double top. It looks like we're building out a very short-term wedge. There's a line here you can imagine, draw out. Another one coming up here. A very short-term wedge right here, price wedge. And what happens with that? They explode, break up to the upside or to the downside. Now this is a retracement from two dramatic moves this past week. Retracement here, a little bit of a test, another retracement, a little bit of a drawdown, and another little move to the upside, another drawdown. Up, a little up, another drawdown. So I see a lot of weakness here, a lot of low volume for the longs, pushing this up. As you see, all the heavy sellers coming in on the short side here, as compared to the longs. So there's a lot of weakness in the gold market right now, and you could just tell just looking at the volume, regardless of a temporary retracements in price. We still haven't got back to this top area here, this resistance area here at 1670, and we may come back this coming week, or we may not. So that is the very short term gold futures chart. Let's take a look at let's see, let's at the longer term. Hold on, move this out of the way. Here we go. And here's the daily chart, the longer term chart on gold futures. And short term, modest volume, more sellers than buyers, obviously. You see the move down the last few weeks from gold. It never did retrace up yet to the 23 or 38%. Actually, I just drew these last night. So so there's two possibilities here. One, we're going to temporarily retrace up to 1661.79. Right now we're at 58.30. Next move up to the upside possibly is 1679, or price extensions, fib price extensions to the downside will continue to move down. We already broke the short-term blue wedge that I've been talking about on my chart analysis the last couple of weeks. We broke down, the price of gold broke down below that line, below the 50-day moving average, below the 200-day moving average, the green line here, and is heading toward price extensions. 1584, 1555, way below 1600. Now we may get a little bounce up here to 23%, 38, who knows, 50%, and then bounce back down. Depends. I'll have a lot of uncertainty in the gold market. Of course, even more uncertainty in equities in the broader market in general. So here we see a little down channel here. Next time I'll draw that channel to the downside here. Hopefully by Monday or Wednesday we'll have a little more definition on the short-term move on gold, one way or another. Let's take a look at the ES futures, S&P futures market, the short-term chart, and here we see another 2-minute chart of the ES futures, S&P futures contract, and I want to talk about Thursday's dramatic move to the downside in the overnight session around a little bit after 7 p.m. Central Time. We saw a huge move based on fundamental news in the mass media concerning the lack of votes for Plan B from the Boehner's group in Congress, and that spooked overseas markets. It spooked American traders and investors, and everybody just sold off. It took about an hour and a half, maybe 2 hours for the drop, and then bam. Whenever you see these dramatic mini crashes, they always revert back, bounce back. Nothing goes straight down, nothing goes straight up. So here's a huge sell-off in a very short-term time period, and then bam, came right back. Broke all the moving averages, obviously. If you were long, you got stopped out, or you covered your shorts, and you lost a lot of money. A lot of folks thought that this was the trend was still going to be down to the downside in the interim, and a lot of folks got in this area here, and what happened? Came right back and it bit you, and that's normal. So you got to be wary of these spikes, either upwards or downwards. And you see the rest of this was Thursday in the aftermarket session, overnight session, and from then on, this horizontal consolidation all the way into Friday's session, and never moved. It dropped down to 1390, 1390 down this way, and 1391, and it bounced up a little bit, retraced up just temporarily for the Friday session, and closed around 28.5. So let's take a look at a longer term time frame. There we go. This is the longer term daily chart for the S&P ES futures contract. And you see we have, again, modest volume, more shorts, more reds, more shorts coming in, obviously pushing this thing down. Whenever you get this V pattern, climax, volume climax, you see always that's a reversal. Hits the bottom, reverses up. So it broke the 50, broke the 200, and bounced right back up to the 50 and above the 50, hugging that medium line of the linear regression channel. And this down bar is the dramatic move down from Thursday sell-off in the S&P market. So we touched that standard deviation line, and we're going to see Monday and Wednesday what happens with this with the S&Ps. If what's going to happen with this Santa Claus rally? Is it going to come back to normal into the mean, bounce up, or continue to the downside? So the next decisions we need to decide on are what are Monday. I'll probably add new price extensions to the downside to see what are possible target areas to the downside. As you see here from the longer term fibs, it already completed a 100% retracement. And once you see these standard resistance retracements 100%, they should give you a heads up that this thing is going to bounce off that back down. Unless it has real legs to move up beyond that. But usually, whenever you get these massive retracements and bounce offs, you're going to see just about this probably, looking at the long-term chart, this probably was expected. I know a lot of other traders in the S&P pits have been telling me that they were expecting a little turn here sooner or later, that this thing was not real, regardless of the financial cliff agreement or not. So next video series, we'll talk a little bit more about volume. We'll see what happens with the price and the price extensions. See if this thing bounces up again, goes back into the channel, back hugging the mean. We'll see what kind of patterns we have. Right now we have heavy resistance. Here we have like almost a pseudo triple top here at around 1460 in the S&Ps right here. And we tested it. We got close to that area at 46, 14 points away, and bounced down. Obviously some of it had to do with technical, some of it had to do with fundamentals. So, but I believe that most technicals, the fundamental news is already built in for the most part, unless something dramatically unknown, such as a war or something that we don't know about, or some kind of natural calamity. So, for Monday, for next week, let's look at another move down on the S&Ps in the broader market, possibly down under 1400, or stability back at the 1430 area, 1440 area, or some kind of reaction to the news, positive reaction to the news, to push the S&Ps to the upside. Okay. I'm going to try to give you a little more detailed charts next week, different types of charts. I have a lot of charts, the real charts off screen right now that I have not shared with you on both videos as of now. But next week I might give you a little peek of what a professional trader really looks at. And these charts here, just very, very generic. Just give you some ideas to help you out a little bit. So, okay. That's it. This is Ruben Lisiaga, Chicago Gold Trader. You can find me on Facebook at Chicago Gold Trader, or on my website, ChicagoGoldTrader.com. Email me, text me, whatever you need to do, and we can talk about it if you need to go over some of your stocks or whatever you need to do. I'll be happy to give you my 2 cents on what I think you're doing or not doing, with the market, where the market's going. Okay, that's it for now, and I'll see you next week. Happy trading next week, and Merry Christmas, and have a great time with your family. Talk to you later. Bye.